Hey everybody, it's Brian Shannon here from alphatrends.net. Today is Friday, the 28th of November. We had a holiday shortened day here today, and the market made it right into positive territory in terms of the S&P 500 for the month. We have now eked out a gain of 19 basis points. NASDAQ this month did lose a little bit of ground, led lower, of course, by the semiconductors, which were down 3%. This week, though, they were up 8%, even without NVIDIA, which we'll take a look at here in a moment. Energy names are starting to peak up a little bit here. They're positive month to date, but the cryptos are still, the worst month to date, but they had a good week. So let's take a look at these charts and make some sense of it. On the left, of course, is the daily time frame of the S&P 500, and on the right, a 30-minute time frame. Each one of those bars is 5 minutes. We spoke about the pattern of lower highs and lower lows here when we spoke last week, and what we were looking for was an undercut of, I had this anchor here saying that it would be nice that we, since we lost the 50-day moving average, it would be good to see it undercut this anchor, which had been so important, and then to undercut this low before a rally emerged. And that's exactly where we had, and a great rally at that. So it bounced perfectly. And what you have to remember a lot of times, as I always point out, is that what looks like that, obvious head and shoulders pattern is sometimes too obvious. That will break the neckline, and the uneducated money has their stops under there. So it's often very necessary to undercut an important low, and that brings in new short sellers who are looking for the end of the world basically, but a little bit too late. Always consider how it got to that breakdown point, and then how are most people positioning, who's left to sell down there. Only the most uneducated money. So that's where we saw the bounce. We got back above the 5-day moving average, as you can see here on the right, and we are above a rising 5-day moving average with higher highs and higher lows. We broke this little level that had the potential to become resistance. As I always point out, it is a level of interest. Until the market runs up to it and pulls back like this, you can't call it resistance, because you're going to see things like this happen, and that's exactly what we saw. Was it blasted right through that. So now the scenario has changed. Instead of people looking for the end of the world, I think what's more likely here is you can look at this now daily chart and start to say something like this: is maybe early next week we see a little bit more strength that puts us to break past this peak right here. Well, if it breaks past there, you've got to remember we've just ground from 650 to 690 to get there, 685. It's extended at that point if it breaks beyond this little high. So what would be better is just the same thing. We saw a failed breakdown here. I'd love to see a failed breakout at this point. Not that it's going to fail altogether, but then we could come down like this, find buyers at that now rising 20-day moving average, and we're back above the 50. So we would pull back, create a higher low, and then what? Then everyone's going to start talking about the inverted head and shoulders pattern. Well, what is an inverted head and shoulders pattern? We had a pattern of lower highs and lower lows. Then we see a higher high. Then we see a higher low. That so-called pattern is complete over here, but I'm going to tell you, you're much better off buying over here as the strength emerges. So that's kind of what I'm hoping for as far as the best scenario, the most tradable likely scenario for the long side, and then we can see a strong close to the end of the year for the S&P 500. Not a prediction, a scenario. So maybe we rally up a little bit, pull back to that 5-day moving average, which is also where we see the 20-day moving average, and then as it pulls back into there, you start to look at the stocks that are most likely to present themselves a low risk, high probability entry. And that's what we're looking for, is low risk, high probability entries. Same could be said for NASDAQ. A lot of people were talking about the head and shoulders pattern in here. Well, that has now broken. That no longer exists. So we look at it and say, what? Well, maybe we're going to see that this was a shoulder, this was a head, and we're going to pull back and make a higher low and then continue to go and break that neckline, something like this. It's a little bit extended short term from 580 to 620, so keep that in mind. Maybe, again, I'm not calling for a pullback here. The evidence says the buyers are in control. Trust that, but if we start to pull back, it will create the next swing trade opportunity to the upside. And you can look at it and say, but what about the volume? It was down on big volume and it was up on light volume. Who cares? It doesn't matter. Only price pays. Look at the average volume from the low. If we start to pull back down towards the anchor from the low, which is at about 604 right now, and we break below that, and the average person, if we break below and hold below the anchor, so instead of pulling back and finding buyers, let's say we get something like this, and we make a lower high, and we get trapped below that anchor, well, then the bigger trouble comes. And you always want to be aware of what are all of the potential scenarios. We're in a seasonally bullish time of year. Seasonality doesn't pay. It's a time of interest. That's all it is. And it pays, for us to say, well, what is the potential bullish scenario? What could set that for a breakdown? And would I just be caught off guard completely? People who buy the dip and then it continues to go down, those are the ones who get hurt. People who wait for the dip to flatten out and turn sideways and then buy strength after the dip with a stop under that low, now your risk is this versus the risk of the unknown when you're pulling back. It might just continue to pull back all the way down to the anchor from April 7th. Our plans have to change our scenarios have to change based on what the market is telling us. We're doing scenario mapping is what we're doing. We're mapping out the potential scenarios and saying what's most likely here and how can I get myself in a position to participate for the time frame that makes most sense to me personally. As a swing trader, this is what I'm looking for the next potential entry. Doesn't mean, you should sell short, but instead protect the gains that you have on this rally for the time frame that you're involved in. The Russell 2000 really started to outperform a little bit this week. In fact, this week the Russell was up 5.5%, NASDAQ up 5%, and these SMH up 4%. So it outperformed a little bit. Now, why is that? Well, there were rumors that Trump's going to get rid of Powell real soon and bring in somebody who's more dovish, and that might mean that the market is anticipating it's going to be easier for interest rates to be cut. And as we've been told all year, lower interest rates are great for mid cap and small cap stocks. So the market is starting to anticipate that. Well, what do you think if we were to see this market, the Russell 2000, continue to rally, and then in a month, or in 3 weeks, whatever the next Fed meeting is, if we get an interest rate cut, what do you think is going to happen to these stocks? We'll probably cut rates, and then they'll start to sell off. The market anticipates the future and discounts it once it comes out, once everybody knows who's left to buy. So I think the market is starting to discount that. That's my fundamental take as a technical trader. So take it with a grain of salt because, again, my specialty and what I do here is take a look at these scenarios on the charts. For the daily time frame of the Russell 2000, we had a great run from 228 to 448, close to 10%. Doesn't mean it can't continue to rally. That is the current path of least resistance. But because it's expended as much energy as it would be normal and okay for it to pull back something like this. And then we would want to see it hold a key level like the 20-day moving average or perhaps the anchor from the low, which would maybe tie that 20-day moving average. And then what do we want to do? Then that becomes our level of interest. What are we interested in? We're interested in then the market telling us there's a low risk entry right here. It's low risk because we'd have our stop underneath that higher low. That makes the low risk. High probability is, well, we've got a rising 20 and 50-day moving average, so the overall backdrop is positive. Anticipate all potential scenarios. Always think 1 or 2 steps ahead. Enjoy the rally while we're here because we anticipated this rally. Now it's here. Enjoy it. Protect the gains, and then say, what's the next scenario that could give me the opportunity to get involved and participate and leverage time as a swing trader. The semiconductors, that they broke that pattern of lower highs. We don't really have a higher low on the daily time frame. I'd love for it to pull back a little bit here next week as well, carve out a higher low, maybe near that 50-day moving average, maybe near the low, the anchor off of the low, which is right now at about 335. Of course, that moves throughout the week, so it's not a static level. And by the way, you see all the Black Friday sales out there and that. I do this analysis right here twice a day for subscribers who are on X. It's $10 a month. There is no Black Friday deal. That is the year-round deal, $10 a month. And I'll get you into stocks like Upwork right at the correct price, like right over here where we bought it the other day. Anyways, let's go back to the semiconductors because as I always say, we can't talk about the semiconductors without talking about NVIDIA. And NVIDIA is still reeling from that earnings report where it gapped up and sold off. The buyers simply are not there. And it's very impressive. Today, the semiconductors were up 1.3% while NVIDIA was down 2%. NVIDIA is the dog of the semis right now. Over the last month and a half, they've been the dog. Doesn't mean they're not a good company. It's just not a good stock right now. And as I continue to point out, I'll just draw some more of these. It shows lower highs and lower lows with a declining 5-day moving average is not the time to be a buyer. We talk about the scenarios of maybe it sets up like this, and I would much rather pay 184.5 with the buyers in control, knowing where my stop goes, rather than guessing that 177 is the low and where do I set my stop? Way under here when the momentum is against me? No thanks. Biotechs have been the real leaders here. They were up 6% this week, 9% this month, and now we're up 37% year to date. Remember when this group was doing so horribly earlier in the year and no one expected them to do anything because the narrative back then was Kennedy is going to slow down all approvals. It's going to be bad for drugs and that sort of thing. And the narrative changed. The narrative changed to look at how AI can help discovery of new drugs and process data and speed along the science. And that's what's driving the narrative now. And the pattern continues. Higher highs and higher lows. Enjoy the trend while it's there. Know where you're going to enter or exit partial positions. If you go back to the weekly time frame, here's the weekly time frame. That's a big breakout. What's the next level of potential supply? We're kind of there. So you have to say, where have we come from? Well, from a low of 70, we've almost doubled here. Well, actually, we have doubled off the lows. This low is actually 66.66, so 132 would be a double. So we're getting close to a double for this index. That's where we've come from. Where do we have the potential to go before we're likely to encounter sources of supply that might become strong enough to offer resistance? Support broken tends to act as resistance. This is that prior support. It might just run right up through that level. It just might continue to do something. Why does it keep doing that note here? It might continue to, please stop putting notes on there. It might continue to do this, or it might run up a little bit, pull back, make a higher low, and then just work through this supply. The first test will often get rejected, so look for the biotechs maybe to do something like this. This isn't guaranteed to offer enough supply to slow it down. Broken support is not resistance. It has the potential to become resistance. Why is that? Because there's price memory. All the people who are buying over here thinking, hey, I love the biotechs. Well, when it broke down, they had buyer's remorse. Now, a lot of them are looking at it saying, well, I can get out break even. I can wash that on my taxes for the year. So maybe we're going to start to see a little bit of underperformance of the biotechs going into the year, or maybe it's just going to continue to rally. But have a plan. Don't just play guessing games. Have a plan and say, I'm going to raise my stop up underneath these higher lows and lock in as much gain as possible because we're at a zone where we have the potential to see supply offered. That's it. And then if we see supply offered, it doesn't mean it's the end of the rally. Instead, a normal healthy pullback would set it up for, maybe we pull back 3-4 weeks, turn sideways, and then we can see the next move go. And that's the way you have to look at the market cyclically like this. Let's take a look at Bitcoin. Bitcoin is still, kind of broken here. We're getting a bounce. Let me move my head out of the way. This is a bounce, and we got a little bit ahead of ourselves. You've got to remember, where has this come from? It just rallied from 80 to 92. That's what is that? 15%, percentage-wise. That's a big rally. Wait a minute, 12,000 on 80. That's whatever. It's about 15%. So it's coming into this anchor. It wasn't really important before, so that's not necessarily a horrible thing. But we're finding supply at this anchor right now. What I'd love for it to happen in Bitcoin is that I'd love to see it pull back, maybe down to this anchor over the weekend, the anchor off of this low. And if that holds, if that becomes a level that does in fact hold, well, then what would happen? Well, I would most likely be interested in it if Bitcoin comes down in here. Maybe it shakes out below that little VWAP. It doesn't matter. It's not meant as a perfect level. But if it does that and then it starts to rally here, well, then I think that's a good place to buy for bounce continuation. But if it doesn't follow through to the upside, then a stop would go underneath whatever that higher low ends up being. So in other words, it wouldn't concern me just because we break a VWAP. That just tells us, okay, we probe these VWAPs. It's not meant as exact support or resistance. But a little normal pullback down into here, a little shakeout, and then get going, this is where the lower risk entry would be. You don't want to buy the dip because what if it keeps going? What if it makes a lower low? I saw that Tom Lee said he's looking for a final flush down to 2,500 and then it's going to go to 5,000 or something like that. I'll listen to price action, but price action says right now we're finding maybe a little bit of supply. We don't know. You can't call that resistance. We're probing it. Maybe it comes down in towards this 2,900 over the weekend and then begins to bounce. Well, then it would be a decent buy opportunity over here with a stop maybe somewhere under here. What about Solana? Solana's trying to find buyers. Let me fix that scaling. Trying to find buyers at the anchor off of this low in late 2023. That has been an important level before. Not perfectly that time and not perfectly this time. It's a zone. It's an area. And when we look at this daily chart and we were to look at even on a shorter term, to blow that up and say, well, what is this? Is this a shoulder? Is this a head and maybe it's going to come down and form a shoulder? Again, what is an inverted head and shoulders pattern? We have lower highs and lower lows replaced with a higher low and then a higher high. It's a simple trend change. That's all those patterns are. People are always just looking for patterns without understanding what they are. So anyways, maybe some further pullback down towards the anchors off the low in the crypto, and then they could get going. Anyways, that's all I'm going to talk about for now. I will update subscribers with much more information, as I always do. It's a great value. You haven't taken a look, then, time to start thinking maybe a little bit more seriously for 2026. Anyways, have a good weekend. Thank you.